Price action trading. You've probably heard of this trading term many times. There are all kinds of videos on YouTube that claims to be explaining the secrets of how to trade price action. But here's the truth. Most of them never talk about what you as a trader should be careful of. Any false breakouts or breakdowns that you need to be aware of for any kind of trading strategies. Because there's no such thing as a guaranteed profitable price action. And don't you just hate it when you don't receive any actionable tips after watching a 20-minute long video? So here you go, I'm giving you 3 golden tips for price action trading. Look out for candlestick wicks when trading breakouts or breakdowns, the golden reversal time, and how to know the front side and the back side of the move. And one bonus tip on technical analysis if you stay till the end of the video. If you've been watching my videos for a while, you guys know that I'm never afraid to share tips that can really improve your trading. So if you're new, you have to get used to my bad jokes, my annoying accent, and remember to smash the like button and subscribe. Price action refers to the rhythm a stock moves up and down in prices. Understanding price action is very important, especially if you're trading short term or any momentum or scalping. And also, understanding price action and risk management are the 2 very important milestones that really helped me become profitable when I was brand new to day trading. Price action tip number 1. Look out for candlestick wicks on the top and bottom when trading breakouts and breakdowns. So when looking at the daily chart for BBBY here, you can see that on the daily, before this huge breakout, you see these candlesticks here that has these long vertical lines at the bottom. Here, here, and here on these couple of days. Now this is what we call a lower candlestick wick. When you see candlestick wicks at the bottom, that means the weakness on the stock is getting bought back up. What does that mean? That means a lot of retail traders, people on social media, and including Ryan Cohen, they think the stock is really cheap, so they want to buy it for a breakout. So if you also draw a trend line at the bottom of the daily, you can see that these wicks, they actually create higher lows, meaning that the bottom of the wick on each daily candle is higher than the one before, and that's technically bullish. As you can see, the stock is getting bought up around $9 and $10 area for a couple more days, and that's what led to the next breakout on high volume, right? You need people buying up the weakness to load up on the stock, and that's where a lot of times when you see these lower wicks on the daily, this is possible to lead to a giant breakout such as BBBY. Now after the breakouts from around $11 all the way to almost $28, $30, you see on this vertical wick on the candlestick on the top this time around here. Now if we look at the daily, this huge breakout with the almost 400 million volume day is this intraday chart right here. You can see this wick around $28 area. If we draw a line here, 28 here. That's also the higher day for this giant breakout day. You can see on this day, when the stock held the breakout for throughout the entire day pretty much, and then it dumped from 26 to all the way to $19 at the end of the day. This kind of dump is what created this wick on the daily. And this is technically bearish. So this is the opposite of what we just talked about. Wicks at the bottom here on the daily means the stock is getting bought back up and it's setting up for a big breakout. However, when you have broken out on the daily, but you end up with a wick like this, a giant end of the day sell-off from 28 to 19, this is technically bearish. And a lot of times you're gonna see this retest of the breakout level the next day. Now moving on to the second day of the breakout, you can see this $28 line here, right? We know that that's gonna be the resistance from the day before. And if you draw this line around across, you can see that's the same area that's being tested at the open. However, we're looking at intraday chart here now. You can see another wick here on the first 5-minute candle of the open. Another wick here, that means the stock actually successfully broke out within the first 5 minutes. However, you end up with a wick. That means the stock broke out from $28 to $30 that you can see here, but is unable to sustain the breakout. Now, why does that happen? And this is really why price action is so important. When you see this kind of false breakout, that means First, it's a short sellers getting squeezed. And unfortunately for this stock, BBBY, once you work out the short sellers, there's no real buyers coming in to buy the stock. Right? If you think about it, if there's actual buyers buying above $28, $29, then the stock should be holding really well above the $28 breakout point. So that's why you really need to look out for these intraday wicks, especially when they line up with a daily wick from the day before. So that's the reason after multiple attempts to break through that $28 area, once at the open and once again around 10 o'clock, the stock was still unable to hold above 28 and it ultimately unwinded to the downside. And this kind of price action on the candlestick wicks on the top and bottom is especially true on meme stocks because they are really socially driven, meaning that all the buying interests are mostly from the retail traders. And I think we all know by now the retail traders are the most emotional traders out there. And you can see the same thing on AMC, one of my favorite stocks to trade. Wicks on the top, you can see eventually led to the unwind, especially when you see multiple wicks like this that's testing the same area. Multiple wicks on this day here with the BBBY breakout, and once again for a couple more days following. When you see wicks attempting to break out once again and failing to break out, that's ultimately going to lead to the unwind to the downside. I have a little challenge for you guys. Comment down below with a recent stock that you traded, whether it's a meme stock or a stock like Tesla, and apply the price action for the candlestick wicks that you just learned. So find the time period on your chart and let me know what you find. Then go back test on the daily chart with a price action tip you just learned, and let me know what you find on your stock in the comment section below. Moving on to price action tip number 2, the golden reversal time. So this used to happen a lot when I was brand new. I will have a stock that I'm watching, for example, AMC here. You can see at the open it's dumped from $24 all the way to $23. And I take it off my watch list and only later to see it bounce from $23 all the way to $24, almost $25. And that's because a lot of times when stocks sell off from the open, there's that golden reversal time around 10:30 to 11 o'clock market time that the stock will bounce. So this is a perfect example here. AMC here on this day sold off from 24 to 23. Now if you look at the bottom, around 10 o'clock to 10:30's area, that's when the stock started bouncing. And this is a very decent bounce from 23.10s all the way to almost 24.50. So we're talking about $1 bounce here. And so this very simple reversal bounce strategy is what I used to trade part-time before I went to work. This is like almost 7-8 years ago. And remember what we learned in tip number 1 with the candlestick wicks at the bottom? If you draw this line around the $23 area, around 10:30, this is also matches with the daily chart where all the wicks at the bottoms are. So when you have multiple factors lined up for a bullish move reversal to the upside, such as 10:30 reversal time that we talked about, and tip number 1, the bottom wick on the daily chart, then this is worth for a bounce on the long side. In order to react fast enough to price action in stocks, it's crucial for us traders to have an extremely fast broker platform. That's why I want to introduce you to Centerpoint Securities, a broker I personally use for a couple of years now. Centerpoint Securities is a broker designed for sophisticated momentum traders. They provide you with unrivaled access to short inventory, advanced routing, and lightning-fast executions. If you ever have urgent questions regarding your trades or positions, just call. Their team actually races to pick up the phone, faster than my ex-husband ever picked up my calls. If you sign up through my referral link down below, you can get 50% off on commissions and short locates for 60 days. And that's not all. You'll also get access to the brand new feature, Centerpoint Edge, which is a suite of tools such as Trade Ideas, TrendSpider, Dilution Tracker, and many more. All available to you for free for 90 days. And that's over $3,500 of annual value. You can check out my discount link down below. Thank you, Centerpoint, for being a humble trader sponsor. Now back to price action. Price action tip number 3. understanding front side and back side of the move. This tip is very important if you're trading small cap stocks, especially those low float runners such as MEGL. And whether you are usually long biased and short biased on these small caps, you definitely want to learn this. This is a daily chart of MEGL. This is a very low float stock. As you can see, recent IPO'd around $50, went all the way to over $200 and sold out from $200 down to $12, $10, and $9. This is a true piece of stock that a lot of times can actually create a lot of momentum to the upside. So on these kind of small cap sell-offs, a lot of time you get a giant day with a lot of volume, such as this one, 75 million volume traded, and this is what we call the first green day. This is a day where the stock went from $10 to $18 breakout, and this is the day we're talking about. On this day, the stock, have a small gap up pre-market and consolidated around this area here. You can see that matches with the daily support, and actually broke out to $18 to a close of almost $19, $21 after hours. Now, if you zoom out on the 5-minute chart, which is what I like to do, if you draw a simple trend line here, if I draw it from the lows from the first green day of the breakout, and all the way through matching the lows and all the support intraday near power hour through the pre-market area over here, you can see this is a giant trend line to the upside. And the high of the after hours is around, let's just call it $22 here. Now, a lot of times, what the front side of the move is if the stock continues to hold this trend line here. So technically speaking, if the stock is going to continue breaking out, holding the front side of the breakout, then on this second day here, it really needs to hold above the $20, $21, and ideally over the higher day from after hours. So it really needs to hold at 22s. So if you're long biased, that's what you want to look out for. You want to see the stock holding this giant trend line to continue the breakout to higher. On the daily, if this thing had held, it has upside above 22, all the way to $30, $40 and above. But if you're long already, it's really important to watch out if the stock breaks down that trend line we talked about. You can see on this day, the stock had a false breakout, another wick again on the breakout in the morning, around 22s and rejected and break down below 20s and went to $19. Now, it's actually really common for these small cap, low float, volatile stocks to break out and break down. But if it stays below this trend line, usually I look at after 20 minutes or so, if it's staying below this, then that means the front side of the move is broken. It's over. And what follows is usually the back side. But if you are short bias, like I did on this MEGL chart, this is what I look for. This is the kind of signal that tells me to get in for short entry on the stock. So that's what you can see here. Once this MEGL broke down the front side and started forming lower highs, $20 rejection, that's when it sold off all the way to $14 over here. And if you look at $14, this is a day of the prior day's support that led to the breakout into the close and into the after hours breakout. So that's why it's, you get a pretty decent move. We're talking about $20 all the way to $14. And then in the next couple of days, if you zoom out, you can see it gave back everything all the way down to $10 where it came from. Now, if you stay through all of these 3 price action tips, first of all, thank you for staying with me so far. And here's the bonus tip I have for you, especially if you are relatively new. We all know that technical analysis and support and resistance is crucial to trading. However, as traders, we need to understand that support and resistance, they can be subjective. So for example, if I was a long bias trader, I'm looking at this green line here, 2460 support. Like we said, long wicks at the bottom of the candlesticks intraday. So I see the support and I want to be able to just bounce it for $1, $2 towards a resistance around $28. So I will long the stock for a quick scalp, essentially. This is a trade where if I got in here, I would be really quickly selling into this wicks here, 26 and 28 if we get there. So all I'm looking for is a $2 bounce. I can be very bullish and my time horizon is only about 10 minutes. However, another trader who's more short biased can be looking at the same chart and see a short play to the downside. Like we said, when the stock rejected at $28 here, daily wick here, 28, and also intraday wicks, this red line, then this short seller may want to swing it for a couple of days, looking to swing it all the way to the downside from 28 to, maybe 23, $20 and below to $11. Both of these theses are valid. So that's why it's important to form your own trading plan with an expected time horizon and stick with your plan using your own technical analysis and price action to help you out. So that's the reason I always stress on this channel, do not follow chat room alerts or live stream trading or copy trading because you simply do not know the person's trading plan or time horizon. I want to thank you and everyone who subscribed for 900,000 subscribers. We never could have gotten here without your support. So that's the reason I want to be doing a 900,000 subscriber giveaway. To win these Humble Trader merch, make sure you are subscribed and like the video and comment down below which one is your favorite Humble Trader video in the comment section below. Share with your friends on Facebook and Instagram, and I'll pick 5 lucky winners in my next video. Hopefully these price action tips can really help you out when you are day trading. If you enjoyed this video, please remember to drop a like and subscribe if you want to see more. And if you want to see these price action tips play out during my live trading, then feel free to check out this video with my commentary. If you're interested in trading with me and learning my trading strategies, then feel free to check out the Humble Trader community down below. Thank you guys so much for watching as always. I'm the Humble Trader, and I'll see you guys next time.